trap. Hello everyone, and welcome to the Smart Investor. The NVIDIA trap. The NVIDIA trap. It's waiting for you. How is it waiting for you? It's waiting for you because earnings are coming out tomorrow and everyone is talking about. And the stock is up. So what does it mean for you? Welcome to my channel and welcome to the Smart Investor. What does that mean? It means essentially that we are here not to be taken advantage of. We are here to educate you. We're here to make sure you understand what's happening. And what's happening is they're setting a trap for you. The market is setting a trap. Beware when you hear all these people talking. NVIDIA here, NVIDIA there. The market is going to tank with NVIDIA. Do something. What are you doing? Are you selling? Are you buying? Be very aware that this is how they take advantage of you. When lots of people are focusing on everything and everything is focusing on that thing. And that thing is NVIDIA. Very, unless you're a trained professional, do not attempt this procedure. Why? Because everything is hyped up. Are you going to be buying? Well, if you're buying and they announce some earnings that is disappointing, you're going to be in for a big disappointment. Are you selling? Why? The company was doing so well. Exactly. It's confusing. Let me educate you. Let me explain to you what is really going on. Okay? Because the last thing you want to try to do is predict the market. The last thing you want to do right now, let's try to predict what NVIDIA's numbers are going to come out. How are you going to know what's going to come out? You don't know unless you have insider information. And you don't want to end up in jail, do you? So what do? Well, like I said all the time, you need to buy when everybody else is selling and you need to sell when everybody else is buying. What is everyone doing right now? Not much of anything, quite frankly. They're just standing there watching and waiting. So shall I stay out? Like I said, be careful. Let us review a little bit about NVIDIA. Let's get some perspective. Let me explain to you what's going on. Let's understand the player. Let's understand the company, which is a player, obviously. NVIDIA. How is it highly valued, lowly valued? The P ratio as measured by the Shiller index. The P Shiller index is around at 36. Check one of my previous videos, but it's been high hust from the longest time, right? I mean, we're talking 2000 crash, we're talking 2020, we're talking now. So we, as a market as a whole, we are extremely valued. We are very high. Well, where is NVIDIA? Well, that basically means that with a P ratio of 36, that investors are willing to spend $36 for every dollars of the S&P. NVIDIA is at 76. Investors are willing to spend $76 for each dollar of earning. Of course, you've got to believe that the PE ratio represents something. And at the end of the day, what is a P ratio, right? Well, it's basically price divided by earnings, the stock price divided by earnings per share. And earnings per share, we know, is not cash. It's just earnings per share. It's a notion that they invented to allow you to track the market so that you think you understand what's happening. But you don't get paid with earnings per share. You get paid with cash, with EBITDA. EBITDA is king. Cash is king. Although, I would say, the jury is still out because Warren Buffett does not like EBITDA. Okay, fine. Operating income then, okay? The point is, you don't want to base your valuation on just one number, which everyone uses. Now, at the end of the day, it does not matter. It doesn't really matter, if it's real or not real. The point is that investors are buying 76 times their earnings. I mean, maybe it's the wrong earnings, but the point is the last time they were at 36, we crashed a couple of times. for the market. So 76, however you believe in the earnings per share or believe in P, we are way above the market. Maybe for some good reason. Maybe for some good reason. What are the good reasons? Well, the company has grown a lot. If I look at my chart, if I recall, I would say that in 2022, the company had sales of 26 billion, and now we're at 79. Hey, this is growing. This is a great company. They're doing great products. Fantastic. Tremendous. How about the cash? EBITDA went from 11 to 50 in the past couple of years. This is great. The margins from 42% to 63%. So this company is doing great. But the issue is the stock is up 3,000% of the past 5 years, 689% of the past 2 years. It's too late, right? Now you're buying when everybody's selling. Not good. They already bought. They already made their money. Now what they're doing is they're waiting to get out slowly. And I believe the owner of the company is selling its stock. Does it mean it's over? No, it's not over. It's a great company. I'm not saying it's a dog and you have to dump it, but you got to be careful. I mean, the thing is up 3,000% the past 5 years. What are you gonna have? We're gonna go to from 79 billion to 150 billion dollars, because that's what you need to justify this kind of valuation. And what if you can't justify? Well, if you can't justify, you can't be the one buying tomorrow or today. I mean, market is closed, but tomorrow. You can't be the one doing that. And that's the issue that I'm having with this market, right? Looking for recommendation. Everybody's telling you what to do, making you nervous, making you act. The player's already out. They're waiting for you to sell them their shares. It's too late. It's too late. Sure, it's a great company, but it's already been discovered. I have shown research that show you that companies, the way investors make money is by investing in companies with low PE. Not 76, too late. So understand the motivation of all these people. Do not get swayed. I mean, if it's for entertainment purposes, that's fine. If you own the stock, okay. It's not going to collapse. Even if it takes maybe a dump tomorrow because of the disappointment, it's not going to collapse. It's a great company. But be careful if you think, well, I mean, I want to get it on it also. I want to get that 3,000%. How are you going to get 3,000%? For the next 5 years. It's impossible. The company would have to go it went from 26 to 80, right? So basically it went almost 3 times. So what? We're going to be from 79 and we're going to multiply by 3. 80 times 3, we're going to be 380 billion. While the competition sits on the sidelines, while this highly complex kind of technology doesn't assume any competition. They stay on top all along so many years. Yeah, it's possible, but the risk has gone up tremendously. And again, we're not talking about price risk anymore. We're just talking credit risk. And this company is a great credit. Maybe there is no credit risk, but the price risk is humongous. Because it's all the way up there. Of course, you're frustrated, right? You say, well, I want to make some money too. I want to be part of the fun. How come these guys have all the fun? I want to make the money. And look, this is a great company. It's doing the stuff for the AI. I mean, you can't go wrong with AI nowadays. Let's get on the AI. It's too late. It is too late. It is not so much what is happening, because we don't really know what's going on with the company. You don't know right now what's going on with the company. It doesn't really matter. It's the way everyone is reacting to what they think is happening. Are they going to announce even more growth? What is the market expecting? How much growth is the market? How much growth is included in this number? If we take the valuation, which I tend to favor, in the past, if you look at my channel, I've got a couple of small caps. I've got Romaco, Miller, Vulcan, Powell, ACM. And what I do is I take the EBITDA, or the cash flow, right? And I divide by the market cap. And I say, market, what is your implied rate? And the implied rate, without going too complicated, but here I'm to educate you, so please listen. The market rate basically gives you a feel for the riskiness of this stock. The same way that if tomorrow you want to buy treasury, if you have the money, right, it's going to cost you, you're going to get like 3.8% or something like that, 3.7, depending which maturity. And that's risk-free, meaning you cannot lose your money. You will guaranteed to get paid 3.8% on your money. So that's like, and how do I know how much I'm going to get paid? Well, because I know the coupon. It's like a CD, right? When they say, hey, I'm going to give you a 5% CD rate, how do they calculate? They just take the amount divided by the total amount that you have, that you're putting in. I'm going to give you 5%. 5% rate means I'm giving you $50 and the CD is $1,000. You're going to get $50 every single year. So that's kind of my rate, right? So the same way when I look at my valuation on NVIDIA, I said, well, what is the EBITDA and what is the market cap? Because I'm going to see that the EBITDA is kind of the money that I'm getting, right? It's not a dividend, but it's the amount of cash the company is generating. Now, this is a way to measure, risk and returns. Well, if I take the EBITDA at 50 billion and I divide by the market cap, which is 3.1 trillion, which is 3,100 billion. This is crazy. Anyway, 50 divided by 3,100 is 1.6. Warning signal. Warning. 1.6% now is safer than treasuries. Oof, that's really safe. Safe meaning the ability for the company to continue to generate that level of EBITDA. Okay, well, maybe they keep doing it. It's a great company after all. But you're now considered even safer than the treasuries. Now, if I compare to a great company called ACM Research, it's 13%. I compare to Powell Industries, it's 9%. Vulcan, 6%. Miller, 14%. So you see, they're like in a range. They're not like 5,000, 6,000. They're in a range, between 6 and 20%. But this guy is all the way down there. You can even see it. It's 1.6. And that gives me a feeling again of being overvalued. But the problem is, they keep yapping and talking about it all the time. They want to tell you, you're missing out a good thing. Do something. Sell, buy. And then they're all coming out, right? And they're giving you all these opinions of what you should be doing, what you should not be doing. By definition, you shouldn't do anything if you don't understand what's going on. You definitely shouldn't be buying NVIDIA if you don't understand what NVIDIA is about. You definitely don't want to be selling NVIDIA because of what you think is going to happen. I mean, the company is not going to disappear. And if you have gains, you keep your gain, obviously. You gotta be rational. You gotta understand the players. And the more they talk about it, because now the story is that NVIDIA is going to tank the market. Everybody's waiting for the NVIDIA because NVIDIA is the market. NVIDIA is everything. NVIDIA is all. This is crazy. It's crazy talk. So stop talking like that. Be a rational investor. Be a knowledgeable investor. And sometimes you need to know when it's time not to do anything. Now, of course, you're going to say, well, come on, I want to do something. Now, for my Patreon subscribers, I will describe some more accurate position that I think you should be taking. My vision, therefore, is that because it's very binary. Is it going to go up? Is it going to go down? What's going on? Oh my God, it's a big surprise. And then we have the election, and then maybe we have a recession. And then September 18, we've got the crazy Fed gonna do something. They said they're gonna lower the rates. Are they? Well, they have to. They have to. We have unemployment issues. So let's lower the rates for a bunch of points from 25 bips to 50, 75, 100, even 150 basis points. Not at once, but over a certain period of time. So we need to do that. We need to do something. We need to make money. We need to be active. This is nuts. But that's good. I always say, take advantage of the market. The market is going crazy, then you take advantage of it. How? How do I take advantage of the market? Well, that's what options are for. Very volatile, but very profitable over a short period of time. If you think that market is going to go up, it's going to go down. It's going to go up, it's going to go down. Right? If it's doing a bunch of crazy things, maybe that is the opportunity to do it. Maybe now is the time to make some real money. But what do I do? Which option do I buy? Which option do I sell? Well, listen, if you think it's going to be volatile, which probably they're going to announce great earnings, and the stock is probably going to go up, probably. Well, then buy a call. I don't know. Don't forget, when you buy a call, not only you need to know the amount, the strike price, where more or less it's going to go, but when it's going to go. Right? If you're correct and you buy an option that is 1 week, 50%, 60, 80%. If you buy an option that is 3 months, maybe it's down to from 80 to 70 or 60. And then if you buy an option that expires in 3 months, then it's less. It expires next year, then it's maybe 20%. But that's okay, because in case you're wrong, right, and the stock actually tanks, at least you have time to recover from the options. Maybe you buy a 1-year option. Okay, you're not going to make 100%. Maybe you make 10%. If you have $1,000, you're making $100. And then you do it again tomorrow. And you make another $100. And then you get a little bit more fancier and you maybe invest a bit more and make $200, $100. And then you could, like that, as a day trader, potentially, make interesting action there. But again, with the notion that you're taking advantage of the market, with the notion that you know that this thing is going to be volatile one way or the other, not just one way. I mean, the stock is not going to go like that, right? How could it be? I mean, it's up 3,000%, people. And we're going into an environment where we are talking recession. We are going into an environment where we potentially might not have enough cuts. We are going into an environment where we are going to have a new president. Who knows who it's going to be? Who knows what the new administration is going to be doing? Who knows if they're going to declare war? Who knows if they're going to create more inflation? Now, obviously, as usual, and I want to keep saying it because later on I want to let you know, hey, I told you, no one is talking about the 35 trillion. Right? They should be talking about that every day instead of, is NVIDIA going to make 90 billion or they're going to make 80 billion? But then again, who wants to talk about the debt? That is not a very nice topic. It's definitely not the politician, because then they have to do something about it. And for them to do something about it, they have to do something you're not going to like. And if you're not going to like, you're not going to hire them. You're not going to vote for them. So they're not going to talk about it. At some point, we're going to have to address it, right? At some point, the same way if you have a patient and has a heart attack, you say, how did that happen? Well, it builds up over time. You keep eating the way you do, or you keep smoking the way you do, you keep drinking the way you do, you keep doing whatever it is that you're doing. That's going to impact you, and you're going to get sick, and you're going to have a heart attack. That's the big one. That's the one that you want to load up on put options. You want to do major thing at some point. I don't know when, unfortunately. The way Spitznagel has done it in 2000, the way our friend Michael Berry did it during the 2008 crisis. That's what you want to do. That where is the big money is. But that's when you're buying, when everybody is selling. Are you that kind of investor? Do you have the guts? Do you think it's possible? That's where it's difficult, right? Because now you're by yourself. Oh, it's easy. Everybody talking about NVIDIA. In fact, you listen too much of this stuff that you think I'm a specialist. I know everything about NVIDIA. I know there's nervous. I know I think it's going to go up. Oh, it depends who you're listening to, right? It depends what the algorithm gives you. It depends what the algorithm is telling you about what to watch. That's the trick, right? It's pointing you to a certain direction. But meanwhile, the smart money is already making moves. Smart money like Warren Buffett. Warren Buffett was out of the market. He sold his BOV position. He sold his Apple position sometime in June, July. He has not invested in NVIDIA because he does not understand what they do. It's a great company. Obviously, I went from 22 billion to 79 billion. From 11 billion of EBITDA to 50 billion. I'm making cash. I am making money. Now, what you should have done, you should have bought in 2022. That's the time now. You're going to be 3,000% and you're out. If you're still in with a 3,000% gain, no, 3,000%. What is 3,000%? It's almost 29 times. 30 times. Think of it 30 times to make it easy. So if I invested $100, it's 30 times. Not multiplied by 30. I went up 30 times. So if you have $100, you have $200, that's one time. $400, that's two times. Imagine how much money that is. That is fantastic. That is real money. But nobody was buying the stock. I don't know if you look at the chart. Look at the chart of NVIDIA at that time. It wasn't going anywhere. And then suddenly, why? Because people realize, oh my God, this is a great company. It's growing fast and high. I mean, if you think about it, yeah, it went from 11 to 50 and 26 to 79, but it went from 26, 60, and 79. So between 24 and now, it's not doing so great. I mean, it's doing great. It's going up, but not enough to warrant a P ratio of 76. It is enormous. It is impossible. It is too much. So again, in terms of education, don't forget to subscribe to the channel and don't forget to like it. It's important for you to click on that button of like because the algorithm then brings me more people. And you need to realize also that we're not trying to predict the market. We're just trying to predict what these people are doing and we want to take advantage of them. And the way we're going to take advantage is we know that there's a lot of nervousness, so we need to take advantage through the volatility. And the best way to do it, like I said before, is through the options market. Now you need to understand what that is. But overall, like any investor, you want to make sure you're not out there on your own. You're not out there, the only one buying when everybody's out to the party. But how do you know what everybody else is doing? Well, that's a question. Well, you could see, because you could see that there's lots of people buying and lots of people selling. They are like this. Now, of course, in that back and forth, right, people are probably unloading their positions and you don't see it. But at the end of the day, my goal for this channel is for you not to be taken advantage of. So please do not take advantage of all the hoopla. The more you hear about something is the less you want of it. Because everybody is in on it. It's too late. It's like coming to America, right? The time to come here when there was nothing. That was the time to get land. Even if you didn't buy land, you just took it. But if everybody's here already, then you say, well, I want more and I want to pay for it. And you know how many times people get stuck over buying something because they all want to get on it. They think it's easy. No, the way you make money, it's like having a big, I want to buy my own business. So what do? Well, let me buy a franchise, right? I want to make burgers. Let me get Burger King. So I could be my own boss. But you're not your own boss as Burger King because you're working for the client. And then on top of that, you're working for the company for Burger King because you got to pay them all the fees. It's too late. They are already done. Okay, my friends? So be careful out there. Make sure you understand what's happening and make sure you join my Patreon channel to get a little bit more information on what makes sense and what doesn't make sense.